This is the 2019 higher level question 1. It's the disposal working. So the disposal working is probably the working that you're most familiar with and most confident with. But last year it did come up in a different way. So I just want to go through this with you now and show you how you would answer it if it came up like this for your own even cert. So the way that it's worded is it's different. So usually you would calculate depreciation from the date of purchase to the date of sale, and that's where you're calculating how many months you had it for in the first year, the van that you got rid of, and how many months you had it for in the last year, and you're calculating depreciation based on that. So this is worded differently, and it's a different way of calculating depreciation. So the cost of the delivery vans is to be written off over a straight line basis over 5 years. Okay, so you're writing it off in equal amounts over the 5 years. A full year's depreciation is to be charged in the year of acquisition. So the year of acquisition is the year that you actually buy it. So full year's depreciation in the year of acquisition. So a full year depreciation in the first year that you had it, and none in the year of disposal. So when you're calculating your depreciation, you're charging a full year the first year, and then in the year that you got rid of it, you're just charging no depreciation at all. Okay, and it tells us that delivery vans have a scrap value of 5% of the original cost. So that means at the end of what's called the useful economic life, or the useful life, the delivery vans will have a value of 5% of what they originally cost us. And then it says during the year, a delivery van which had cost €25,000 in 2016 was traded in for €14,000, that's the allowance, against a new delivery van costing €40,000. The cheque for the net amount of this transaction was incorrectly treated as a purchase of trading stock, but was entered correctly in the bank account. This was the only entry made in respect of this transaction. So everything else here is the same, apart from the depreciation policy. Okay, so I'll show you now how you would answer that. It would be good if you had your exam papers in front of you while I go through this question. So the first step, as always, first to begin with, I have gone through this question in the 6 steps that we would usually use. So it's the same format, and I'll try to stick to that as much as possible. First step was that the cheque for the net amount of the transaction was incorrectly treated as a purchase of trading stock. So that means that the cheque was put into purchases when it shouldn't have been put into purchases. So you need to remove the cheque. So the new van was cost €40,000, and it was traded in for €14,000. So 40 minus 14 is a 26. Okay, so the cheque that you had to write was €26,000. So your purchases from the trial balance is 1,045,000 minus your 26, which leaves my purchases now at 1,019,000. I think there is a working above this. So this is working 3 in 2019, and I'm only doing the disposal in it. So I think if you were going in order of the workings, there is a purchases adjustment in either working 1 or 2, but I'm just going from the trial balance figure. So that's why I'm using the 1,045,000. So that's the same, no difference here. Next step is to calculate the depreciation on the old van. So we need to remember it's a different depreciation policy, and it's that we need to charge, it's written off over 5 years, and we're charging a full year in the year of acquisition, so full year in the year that we got it, and none in the year of disposal. And you need to remember that we have a 5% scrap value of the original cost. And the formula that you use, you would have seen this formula when we did depreciation in 5th year, is your cost minus your scrap value. This is your formula, the cost minus the scrap value over the useful life. So I'm trying to find out what the charge for the year was on the van that I got rid of. So I'm filling in the formula. The cost is €25,000. The scrap value is 5%. So to get the scrap value, I said 25,000 by 5%, which is €1,250. And the useful life is 5 years, which is here. So 25,000 by 25,000 minus your 25,000 by 5%, which is 5 years. That brings you up here to 25,000 minus 1,250, which over 5 years. And that gives you then 23,750 divided by 5 years, which works out a depreciation charge of 4,750 per year. And that's, I'm just getting this is new. So that's just me calculating the depreciation charge per year. Now I'm working down here to get the depreciation on the old van that I got rid of. So remember, we're charging a full year in the first year. So year one, usually you would have 25,000 multiplied by whatever percent they give us, multiplied by the number of months. But in this, we're just charging a full year. I've calculated up here that we're charging 4,750 per year. So I'm putting in a full year's charge there in the year of acquisition, which is the first year, which is 2016, of €4,750. So I bought the van in 2016, and we're doing the accounts for 2018, which means we only had one full year. So we had another full year in there of 4,750, and the depreciation policy tells us that we don't charge any depreciation in the year of disposal. So 2018 is this year, I'm not charging any. No depreciation being charged there, which means that the depreciation charge on the old van to date was €9,500. The next step is step 3 is calculating your gain or loss. There's no difference here at all. So standard formula, cost minus accumulated depreciation gives you your net book value. So 25,000 minus 9,500 gives us a net book value of €15,500. We're given an allowance, sales proceeds, what I always put in. The allowance is €14,000, but we had a value of 15,500, which means we need a loss of €1,500, and that's a selling and distribution expense in the profit and loss. Okay. The next step is step number 4. Just move this down here. Is a depreciation charge this year. So I kept the same format as we would do in the standard, or the ones that we'd see more often. We always start off with the old van. So that's where I'd come up here. Sorry, I'll just bring that down a little bit. I'd come up to the old van. Remember, I'd get this figure, but it's nothing. So I've just put that in there and said there's no charge on the old van because we got rid of it this year. Then we got a new van, and I'm using the formula, the same formula, cost minus the scrap value over the useful life. So 40,000, the new van was worth 40,000 minus the scrap value. And this is me calculating the scrap value over 5 years. So 40,000, we're going to have a scrap value of €2,000. So we're writing off 38,000 over 5 years. So we're charging 7,600. And I'm charging a full year there because that's the year of acquisition. So we got this van this year. And in the first year when we buy vans, we're charging a full year depreciation. So that's why the 7,600 going in there. No months. I do not care about months in this type of question. Then standard again, remainder of vans. So 155,000 is coming from the trial balance. I'm taking away that old van that we already did our depreciation on. So 155,000 minus 25, which means that we have €130,000 worth of vans that needs to be depreciated. So again, scrap value, 130,000 by 5% over 5 years, which gives you a charge of €24,700. And now I'm adding my 0 plus my 7,600 plus 24,700, which gives me a charge for the year of €32,300. Okay, so full year in the year of acquisition. So we've charged a full year on the new van, and none in the year of disposal. We got rid of this van this year, so that's why there's no depreciation there. So there's no months in this question. Then my new accumulated depreciation and my new cost, they're standard, no difference here. Step 5, new accumulated depreciation. Get your previous depreciation. We had a cost of 155,000, and in the trial balance, the figure is 120. That's the net book value, which means previously we have written off €35,000 worth of depreciation. Get my charge, add my charge for this year, which is my €32,300, and take away the depreciation from the disposal, which is this figure up here, the €9,500. Okay, and that leaves me with a new accumulated depreciation figure of €57,800, and that's the figure that will be taken away from the fixed assets in the balance sheet. And step 6 then, last step, is calculate the new cost. In the trial balance, we had delivery vans with a cost of €155,000. We got a new van worth 40,000, and we got rid of a van worth €25,000. which leaves our new cost at €170,000, and that's the fixed asset in the balance sheet. So the only difference here is how we calculate the depreciation. So usually we'd be given a percentage, and we'd be told to calculate depreciation from the date of sale to the date of purchase. That is not the case here. We're using the formula that I have up here: cost minus scrap value over the useful life. And you just follow the steps as normal. Remember, charge a full year in the year that you get the van and none in the year that you sell it. Okay?